U.S. and China recently agreed to significantly lower their high tariffs, which has provided a brief reprieve from the long-running trade war. However, some say it is too early to say that the U.S. economy has completely escaped the recession crisis.
The United States and China, who have been negotiating in Geneva, Switzerland since the 10th, have agreed to lower tariffs on each other by 115% for 90 days. The market reaction was positive as the two countries, which had been in a tense standoff for months, suddenly joined hands. However, experts are analyzing that uncertainty is still high, and the economic shock is ongoing. Peter Boockvar, chief investment officer of Bleakley Financial, said, both sides ultimately saved Christmas, and evaluated that this was the result of the United States listening to the desperate reality of small and medium-sized businesses. Erica York, vice president of the American Tax Foundation, also said, this agreement was a measure that prevented an economic disaster, and that this was the result of the Trump administration recognizing the seriousness of the 145% tariff on China. CNN reported that President Trump had softened his stance somewhat in consideration of empty shelves and instability in the financial market. However, high tariffs still remain even after the agreement. Although some of the measures have been eased, the effective tariff rate in the U.S. is still at 13.7%, the highest since 1910, according to Moody's Analytics. Accordingly, concerns about rising prices and slowing economic growth remain. Mark Zandi, chief economist at Moody's, warned that if the current tariff level is maintained, U.S. GDP next year will be lowered by 1 percentage point, and inflation will be higher by 1 percentage point. He recently lowered the possibility of a recession in the U.S. from 60% to 45%, but emphasized that the crisis is not completely over. Justin Wolfers, a professor at the University of Michigan, also said, the situation is better than yesterday, but it is still worrisome, and it will take time until the problem is completely resolved. In particular, the U.S. government has not completely put down its tariff weapon. Some items such as lumber, semiconductors, copper, pharmaceuticals, and trucks are still subject to additional tariffs. And an investigation into imports related to aircraft and jet engines has also recently begun. In this context, RSM's chief economist, Joe Brisuelas, said he still sees a 55% chance of a recession in the next year. Investors and companies are still bracing for the government's next move, Wolfers said, adding, the best news would be if someone takes the tariff button out of President Trump's hands.
President Trump's Middle East tour reveals economic, security, and political calculations that go beyond simple diplomacy. Attention is being paid to what kind of ripples this tour will bring to the Middle East situation and American politics.